All right, here we go. Welcome back to Stocks by the Numbers, and I wanted to do just a quick earnings update on two names. One of them was one that we looked at recently, and everybody was waiting for the earnings. As you see, stock is down after hours. The other one was one that someone else requested not too long ago, but I wasn't aware that the company was posting earnings today, but we'll take a look at it also real quick. But first company, Advanced Micro Devices, ticker symbol AMD, listed here on the NASDAQ. Stock closed 119.5, up over 5 points, 4.5% going into these earnings. Initially had a spike up because technically the company did beat earnings estimates. On the EPS side, $1.09. Analysts were expecting 108.1, so they beat by almost 1 cent. Revenue came in above expectations, even though everyone right now, I understand everyone's looking at the data center revenue, but the other segments, like the gaming segments, came in above analyst expectations, and the company was able to pull out a beat, 7.66 billion in revenue. Analysts were expecting 7.53, beat by 125 million, or roughly 1.6%. Stock right now down after hours, 109, down over 10 points. Was down, where'd we go? We got to about 106.5, and we since bounced. Looks like it's starting to kind of flatten out and hold steady at around 109. This other trend line here, well, first of all, after hours, right? This was the initial pop, and then the drop kind of back down to earth. So since then, we have been kind of trumpeting. I mean, you could make the argument maybe from here and just kind of say we were in this downward channel potentially, and now we're kind of coming out of it. So only time will tell. I have this line drawn out as well. Looks like about 112. Yeah. So this is going from this drop here, right after the bull dropped in 2024, connecting to that bottom there of August 5th, 24, and just cutting across, and you can see how it met up recently at that trend line. So that, in my opinion, could be a decent support level to watch. The problem is, obviously, we're a couple of points below it. And right now, if it did want to retrace back up there, you're looking at about 112 and 3/4. So it's really up to the stock. Overall, it really depends on how you're playing this, right? If you stepped in a day or two ago and you bought AMD calls and you let them ride going into earnings, even though, again, technically a nice earnings beat, the stock is down, so you're screwed, right? If you're an investor, I personally couldn't afford shares of AMD, but I did buy a handful of shares of the ETF AMDL. That is a 2X. Yeah, 2X long daily ETF on AMD, so it tracks the movement of AMD, but it's obviously much cheaper. It's down at like $6 and change now. But even that I bought, a couple of weeks ago, I think, when we were first speaking about it. So I bought that up at like 770, 780 or something. I'm down on that, but again, it's only a handful of shares for me. But anyway, long story short, my point was, if you originally had that long-term mindset, right? When we were looking at it at 124, 116, I kept saying in the Discord, in my opinion, I like it, especially for the long term. And if I like it at 120, 116, now it's down at 109, 108, technically I should love it even more. So for the long term, if you're able to hang on, I think over the next couple of quarters, it's going to bounce back nicely. And again, even if we come back up here to this trend line, we're looking at about 132.5 potentially. If we get back to the top of this range here, maybe by next quarter, again, we can run up to, we could get to the high 130s and potentially even start to break out next quarter because, again, they're citing that data center revenue was slightly below analyst expectations, but it technically was up year over year. It's moving in the right direction. And, again, I appreciate the fact that analysts right here, you can see, expecting data center revenue 4.14 billion. They came in with 3.9 billion, but they say the data center division, which includes its AI chips, jumped 69% to 3.9 billion. So again, I appreciate the fact that we're looking for a little bit more, but 69% growth, I mean, there's definitely nothing to sneeze at. And just because, again, they didn't post 78% growth or whatever the heck they were looking for, that really, in my opinion, I don't personally think it's a reason to really beat up the stock. But it is what it is. People are basically directly comparing this to NVIDIA, even though years ago they were directly comparing it to Intel. Now they're comparing it to NVIDIA, and I understand the AI space. NVIDIA is the leader. They don't have much competition, so that's why the stock's flying high. I can appreciate that. But again, we know that the growth across the board in all of these tech segments is going to require the backup players as well. That's why a month or two ago, whatever, I came out, I did the video, and I mentioned some of the backup players like the AMDs, the SMCIs of the world, right? Sometimes the backup players are going to benefit and see more growth from these lower levels over time, as opposed to the already potentially overinflated NVIDIA. But I guess if they consistently keep showcasing demand, then NVIDIA will probably hold steady or continue to increase in value. In my opinion, I think the stock is tremendously overvalued, but people are looking at it as the leader in the AI space. Everybody wants their chips, so everyone bought their stock, right? Sometimes it's as simple as that. Overall revenue increased 24% to $7.66 billion, ahead of the $753 billion that analysts had modeled. Personal computing revenue rose 58% to $2.3 billion, driven by what the company called strong demand for its Ryzen processors. The gain was slightly offset company's gaming unit, where sales fell 59% to $563 million, and its embedded segment down 13% to $923 million. I saw another article, though, that was saying that they were looking for like $497 million from the gaming segment. So even though technically gaming is down a pretty big chunk, it came in roughly, 65%, 65 million, or like 12% above what analysts were expecting for the segment. So, that's why, in my opinion, again, was it a phenomenal earnings beat where they blew everything out of the water? No. Are people kind of focusing on maybe what they want to focus on so we can drive the stock down lower? In my opinion, that's what it seems. Because overall, the company seems to be growing nicely. During its quarter, company posted a profit of $482 million, compared with $667 million, a year earlier. Profits down. Adjusted per share earnings came in 109. Chief executive said there are clear opportunities for the company to continue growing in 2025, citing its product portfolio and growing demand for high performance and adaptive computing. For the current quarter, AMD guided for revenue between $6.8 and $7.4 billion, midpoint of which beat the $7 billion that analysts were expecting. So $7.1 billion mid-range, originally looking for $7. So that technically is a good sign as well. Company has benefited from robust AI demand, supplying chips used to create and deploy tools that produce human-like text, images, and video, but its non-AI offerings have stalled growth. As part of a shift in AMD's broader business strategy towards AI, it said in November that it would reduce the global workforce by 4%, or about 1,040 jobs. So that will most likely help to re-increase that potentially lost profitability that they saw. Maybe because it's a backup player, maybe, I still like it, because again, I appreciate the fact you can pull out certain pieces of this report and say, oh, well, this is down, this is below expectations, so that's why the stock is down. Understandable. But again, I still like the backup players. Now, this is just my opinion. If you happen to jump in AMD recently at 120, now it's down to 109, you're pissed, they missed earnings, you're just going to sell. Again, it's your money, you work hard for it. If you feel more comfortable just cutting your losses and not riding it out, it's entirely your own prerogative. I will respect your decision. We're reading IonQ. Yeah, IonQ's been raging since we last looked at it. It looks like it's been holding steady around that $40 mark. But again, demand is up. The data center revenue is technically up a nice chunk. It just slightly missed what analysts were kind of forecasting. And of course, profits down. So again, I appreciate the fact if it goes down before it goes up. But again, overall revenue increased 24%. I mean, it makes me laugh that we put out, like I always say, we put out these estimates for a backup player like AMD, and if they slightly miss, we take the stock to the shredder. while at the same time, I always raise that potential red flag and that BS that might be taking place behind the scenes with these lowball estimates coming in for Nvidia. If Nvidia really is a powerhouse, how come we haven't seen that tightening and that narrowing on the expectations for Nvidia? Somehow, some way, they're always like I said, 20% below expectations. But yet something like AMD, they're swinging for the fences with the data center segment, looking for 4.1, and the company, again, revenue jumped 69%, but it still wasn't good enough, and they just slightly missed 3.9 billion. How come the estimate for this wasn't 3.6 billion, where the company now, after, you know what I'm saying? After revenue jumping 69%, they should have beat estimates by 10-15%. But instead, they come up shy by about 200 million. And everyone's putting so much weight on that, yet at the same time, the rest of the business was able to offset that slight miss, and they were able to beat overall revenue estimates. Again, overall revenue increased 24% to 7.66 billion. So, you know, again, the way I'm looking at it, if you're going to directly try to compare it to Nvidia, then yeah, Nvidia is the front runner, so they're probably going to outperform them. But overall, you know, people, I remember when I was a broker, again, that was back, like 2012 to 2017? No, 2010 to 2015? Yeah, it was like 10 years ago or something. But back then, I remember even looking at AMD. They were operating at the loss, and the stock was sitting and kind of just going between like 9 and 11, $9 and $12, and like no one kind of like thought that they would turn into a massive grower. And then what happened? Then they started slowly taking market share away from Intel. Then people started bashing Intel, and then they started blowing AMD. So that's why, you know, if you're looking through that long-term lens, in my opinion, it doesn't seem like you have much to worry about. If you stepped in just on calls, or you just bought the other day going into earnings, well, you have to understand that earnings are a gamble. So in the immediate short term, you may have taken a hit. But, you know, in my opinion, I think long term it'll be fine. Similar to what we saw with PayPal, right? PayPal kept reporting decent earnings, and the stock continued to fall. And I said, over time, it should be fine. Look for that slow and steady U-turn recovery. And recently, I know the company just posted earnings. They brought it down. But before that, the stock slowly rebounded and almost made its way all the way back up to $100 a share, right? They beat that thing up and brought it all the way down to like 53 and made new lows, right? So sometimes in the immediate short term, it doesn't make sense, and you may lose your confidence. However, over the long term, again, if the business is solid, if the growth is there, then technically you really shouldn't have much to worry about. But yeah, a little bit of a mixed quarter here, right here. AMD gaming revenue at 563 million versus you know, these analysts were expecting 498 million. So that's what I mean. You know, some people were looking for an even bigger drop in something like the gaming revenue segment, and they came out and they were 12-15% above those expectations. And technically, yeah, the 7.1 billion ahead of the 7 billion is technically in line, slightly above what analysts were expecting. But yeah, obviously, if they came out and that data center revenue was that 4.1 billion or 4.2, 4.3, then obviously the stock would have shot up. But again, in the immediate short term, if they want to bring it all the way down to the bottom of this trumpet range that we looked at last time, I mean, we're looking at potentially $90 over the next week or so, maybe. And in my opinion, I already think this is an overreaction. But again, the market has a mind of its own. People try to talk to me about PE. People try to talk to me about market cap. Again, it's never about fundamentals until they want it to be about fundamentals. But the numbers overall on AMD, we could look quickly again. $2.25 billion in debt, $3.7 billion in cash. Again, this is last quarter, but cash outweighing debt by about $1.5 billion. Assets outweighing liabilities heavily in both the short and the long term. Equity climbing up to 57. So what? We're at like 60 billion. And then we come down, even if we look at last year's numbers, you're at about 23 billion, right? Which would put quote unquote fair value of the business at about 83 billion in change. And stock was trading at the close before this drop. Stock was trading less than 2.5 times quote unquote fair value. So that's why, in my opinion, I do not think AMD is overvalued. I do not think they need to crash it down and kind of bring it back down to earth like I used to say about NVIDIA. NVIDIA is a different story. NVIDIA is a company bringing in whatever, 60, 70 billion for the year. It has a market cap of $3 trillion, right? So you can't really make that comparison. We already discussed the massively overinflated value of NVIDIA. But you know, I'm not really trying to focus on NVIDIA, but it seems like that's how traders are looking at it. So that's kind of why I go down that path. But again, you can see even going back here, look in 23. I mean, we're right here now, right? The middle of this old consolidated range. And look, the stock consolidated from June all the way into October. And people were probably like, what the hell's going on? And then kaboom, right? And we break up and out. So I know some people may be upset, but honestly, in my opinion, I'm not upset. I'm not worried. Only if I rode calls into earnings would I be upset. Shareholders for longer term, again, in my opinion, I don't think you have much to worry about. Bottom Bollinger Band on the daily, 111.5. We technically below that. RSI was up to 47.5. Now we're going to drop back down to the 30. So we may open up very low down here at sub 110, and then we might slowly start to see a rise throughout the day. Only time will tell. We switch over here to the weekly. Bottom Bollinger Band on the weekly, about 102.5. And now technically we're below this 200-day moving average, obviously, 115.48. Stock down here at 109. So, I mean, we could bleed to the low 100s, and again, even into the 90s. Who knows? It didn't make sense to me when I saw PayPal hit new lows into the 60s and the 50s, but it did. And people kept asking me, it's down big from, when we looked at it at whatever, 68, do you still feel the same way, or would you jump ship now? Like, no, the company hasn't changed. Just because the stock is down doesn't mean the company has changed, you understand? So that's why something like a PayPal, even something like an AMD here, a little bit of a mixed quarter, you want to bring them down a little bit? All right, fine, fair enough. Over time, should be fine. 102.5, again, could be possible, which would make new 52-week lows. But you'll have to keep an eye on that. We'll look at the pivot points real quick. Next support level on the weekly down here at 86.40. That would be a drastic pullback. Again, that would pull it back to this the bottom of this kind of consolidation zone back throughout 2023. But we'll see if we take it that low. Next support level on the daily, 108.60, which, yeah, was kind of within about 2 points. Yeah, it went down 106.5. So 108.60, right, which is like right there. And you can see the multiple pullbacks and bounces around that level. So that's why it may have flash broke below that pivot point, came right back, reclaimed it, and now it just completely flattened out. So we might see it hold that level. That's a key level, obviously, for you to watch tomorrow. If it does happen to break through, next support level 101.25. So if we do see it break and it wants to close down at 107, 106, then yeah, you might see 101, 102. But again, in my opinion, I think it's an overreaction, but that's just me. Let me know your comments down below. One more stock I wanted to look at was Chipotle Mexican Grill, symbol CMG. Again, this is a company, they do burritos and whatnot. And I was kind of mixed going into this company. I know someone mentioned that they wanted to do they wanted a video on CMG going into earnings again, but I looked at it today. It was like 2 in the afternoon, and I saw they were posting earnings today after market close. So even if I made a quick video on CMG, probably like 15, 20 people would have seen it before market close. It probably wouldn't have helped anybody. But we'll do a quick overview real quick on CMG. They posted earnings, and we can see EPS came in just above what analysts were expecting, 25 cents a share. They were expecting 24.5 cents. Revenue comes in basically in line, tiny miss of about 3 million and change, coming in at 2.85 billion. The company and the stock overall has been growing nicely. I mean, this is a 5-year chart here. You can see the stock is up huge. Went through a 50-for-1 stock split back in June of 24, roughly 8 months ago. And we can see slight drop, and then we've ran back up and kind of just evened out from where we started. But overall, the earnings have been pretty impressive, I can't lie. And when they do miss on revenue, you can see very, very slight miss. EPS has been solid. We're up to 2.7 billion, right? We get up to almost 3 billion there for that quarter. Estimates were up to 2.94. They post 2.97. Then you can see 2 quarters ago, again, slight miss on the revenue side, and now this quarter, another slight miss on the revenue side. So the main concern is the stock viewed as overvalued? Look at that chart, old chart going back to 06. But is the stock overvalued bigly to where we can see a big pullback now? Stock closed at $59, up about 1%. Right now, after hours, it's sitting at $56, down 3 points, about 5%. Market cap, $80.4 billion as of the close. We just took about a $4 billion haircut, so we're sitting at roughly $76 billion right now, trading over 50 times earnings. And usually in my eyes, I feel a lot of these food stocks have kind of been held down, and they've taken recent hits based on the surging inflation that we've seen with food prices. But CMG, I mean, technically, they're coming in line and beating more times than not. So I appreciate the fact that we pumped them up. But 54 PE for a company in the food sector could be viewed as overvalued. Beta 0.8, again, the beta volatility of the stock in relation to the overall volatility of the market. It's about 0.8 as volatile as the market. EPS been solid, 4 beats in a row. Look at that growth over the years, and you can see where the hyperinflation really started to pick up coming out of the lockdowns, right? 2019, 5.59 billion in revenue. 2020, a touch below 6 billion. Then we're over 7.5. Then we're over 8.6. Now we're at almost 10 billion for 23. And for 24, I'm assuming we're probably going to hit that mark. Yeah, it looks like it hit that mark. So revenue skyrocketed, but in all fairness to them, I know they do keep opening locations. I was just potentially personally mixed about how earnings and revenue might look over the next couple of quarters, because I know recently people have been kind of badgering Chipotle. And I know people go in, they start recording with their phone right away. Oh yeah, make me a chicken burrito. And then they're watching, oh, look how much chicken they're giving me. So that's why I felt like there was a lot of pushback from the public, but somehow the public keeps lining up for their food, and they keep, coming in line or slightly above estimates. So I guess you can't believe everything you hear and see. Chipotle sales have been volatile. Okay, new menu items. What do we got here? Harsher weather, holiday timing. I don't know if I would agree with that. Forecast full year same-store sales growth that disappointed Wall Street following, quote, volatile sales trends so far this year. Chipotle said it expects same-store sales for the year to increase in the low to mid-single-digit range. Okay, so that means like 3, 4, 5%. Analysts were expecting 5.4. Okay, so we're starting to slow down a little bit. Comps have been volatile so far in 25, with weather having a large impact on our sales than what we experienced last year. Again, I used to work in the city for a little bit over there at like 50 Broad, right near New York Stock Exchange. There was the Chipotle. The line would be down the block, or around the corner. And again, we're talking New York weather, right? Freezing rain. It was freaking snowing outside. Doesn't matter. People lining up. They were eating Chipotle. In all fairness, that was like 10 years ago, but you get my point. I don't know if I would blame the weather. Maybe it is this internet backlash, right? Who knows? They wouldn't acknowledge that, obviously. Referring to comp same-store sales, which company defines, okay. Quote, while we believe underlying transaction trends are healthy and we have a strong plan for the year, we do compare against progressively tougher comps in the first half of the year, and therefore are guiding to a low to mid-single-digit comp for the full year. Okay. Whether the chain could keep up same-store sales. Okay. Harsher weather again. Okay, what is happening here? What is loading? Virus. Uh, Focused on opening more restaurants internationally. Okay. Upgraded equipment like rice cookers. They don't have rice cookers? Or they're upgrading to better ones? Okay. Faster cooking grills. Okay. And fryers that can fry more chips. That can help with faster, more consistent service. The company has a goal to open 7,000 restaurants in North America. The executive said they plan to launch a new limited time menu offering around mid to late March and expressed excitement about menu items to come later in the year. And as businesses race to find more ways to use AI, Chipotle said it was developing ways to deploy technology to keep customers from drifting toward other options. They're a Mexican fast food chain that makes burrito bowls and wraps or whatever the hell they do. And they got to mention AI, right? They thought it would help. They thought it would help. But as we said, that we noticed like within like the last quarter or so, like the last 3-4 months, if you notice, the companies where they used to mention AI and see that positive bump, we speculated that that would no longer be the case. Well, I speculated anyway. And you can see that even despite their best efforts of mentioning AI to help push their customers, it didn't matter. Stock down 5%. Quote, when the model detects that a customer's behavior is changing in a particular way that would signal the propensity for churn, we will take them on a new journey with personalized extras and offers to encourage them to re-engage. What the heck? Sounds like something you'd hear out of DraftKings. Quote, I think those things are going to drive meaningful difference within the digital channel. Well, yeah, I mean, you're technically manipulating people, but I guess only time will tell. I don't know. I wouldn't buy into it, though. For the fourth quarter, Chipotle revenue $2.845 billion, up 13% year over year. Very nice. Same-store sales up 5.4. Very nice. Company reported adjusted earnings. Yep. They were looking for 5.7. It seems like its limited time brisket offer were popular with diners, even though it was a difficult item to procure. But they said that a multi-year absence from Chipotle's menu helped build up anticipation, taking a page out of the McDonald's playbook, right? Like the McRib, the thing comes back, I don't know, it's like every 2.5 years. I don't even know if it's like on a timely schedule, honestly. I just feel like it's so random, it's so out of left field, and then, some schmuck runs up to me on the street, like, oh, did you hear the McRib is back? I don't know. Maybe it's just me. Quote, I know I probably ate it once a week throughout the entire season. That's BS. That's BS. Just like, again, I'm talking a while back, maybe like 2012, 2013 or something, but I remember there was like the McDonald's CEO at the time, and it was when McDonald's just kept making new and new and new crap, and the menu got massive, right? And sales started to dwindle down. And I remember he came on, he was doing a little interview on CNBC, and he's like sitting there holding a freaking Big Mac or something like that. And I'm screaming, that the brokers, I mean, they might not remember it, because it happened to me. But someone out there might be able to attest to the fact that when we were watching the segment live, I was screaming at the TV, bite it, eat the Big Mac. But he didn't do it. And sales continued to drop. So just something funny that I always notice, right? They'll come on TV, but they themselves won't actually ingest the food. But yeah, I'm not trying to go down the rabbit hole, but I saw a random quote like that. Oh, I ate it once a week, when it was around. Like, yeah, BS. I personally call it BS on that. Eat it on TV. Eat it on TV, I'll believe you. California wage increase. Oh, okay. Increase hurt their sales. It should hurt their profit. Shouldn't hurt their sales. And its restaurants and across the industry remain depressed in the state as a result. Said it's holding off additional price increases for now beyond the nationwide 2% increase taken in December. Yeah. Yep. Known for its guacamole. What is this? Working to source its avocados, other suppliers beyond Mexico to keep providing it. Ah, I see now. Now sources goods from Colombia, Peru, Dominican Republic. Half of its avocados coming from Mexico. Tariffs on supplies from Mexico are looming threat. Said it would have a financial hit if the tariffs come to pass. They will most likely come to pass, in my opinion. Reading. Oh, this guy's the new CEO. That's why he mentioned he used to eat the food. Okay, now it makes sense to me. This guy went to Starbucks. I don't know if I would personally trade Chipotle for Starbucks, but that's just me. Money talks and bullshit walks. Strong growth trajectory. In the fourth quarter, Chipotle owned 119 company-owned restaurants. There was something else. Yeah, here. Chipotle had another outstanding, delivering strong transaction-driven comps each quarter, expanding margins, adding over 300 new restaurants. Okay. Gaining momentum. I'm surprised. I feel like they're all around. I don't know. Maybe it's because I'm here in the States. But yeah, they keep planning to open more locations, so the growth is still there. The demand is still there. For 2025, Chipotle management plans to open 315 to 345 new company-owned restaurants and expects comp sales to grow in the low to mid-single-digit range. Quote, I want to make sure that as we continue to scale Chipotle, everything we do is in service of our guests or those, okay. Right, 7,000 restaurants. That seems like a big number. Growing our AUVs beyond 4 million, expanding margins, making progress toward becoming a global iconic brand. Inflationary cost, impact of potential tariffs. Right, we're technically on a 30-day pause with the tariffs, by the way, with Mexico and Canada, if you weren't aware. Again, I'm assuming Trump using it as a leverage, but I do know that 8 years ago, I do know that he spoke about the trade deficits between even our neighbors and our allies, like Mexico and Canada. So, I don't know. Again, right now, we're on hold, but I honestly wouldn't count anything out. I wouldn't count anything out. Again, they mentioned the guacamole, so you got the avocados coming in. Represents 7 to 11% of CMG's cost of goods sold. Wow, yeah, so if those tariffs do pick back up, yeah, they can potentially take a big hit off of these Mexican avocados, which make up 80% of America's total avocado consumption. I personally don't eat them, so I don't care, which means there are no easy alternatives from other countries. Oh no. Last summer, when the Mexican avocado market saw some price volatilities, Chipotle said it was less impacted because it has been diversifying its supply chain, noting that the majority of its avocados came from Peru. Huh. So last summer, it's not an issue. This summer, Trump's a schmuck, it's an issue. So I don't know. I don't know. Still, the company reported higher food, beverage, and packaging costs in the third quarter, citing rising avocado and dairy costs as the main reason. Okay. Quote, Chipotle has historically cited other countries where the brand can import avocados, though we view it as prudent to expect it will be difficult to fully offset the impact. Correct. Anticipates that potential tariffs could lift Chipotle's by 0.5 percentage point. Okay, fine. Again, talking about the avocado. I'm reading. I mean, again, technically in the numbers, wait a minute. Right, low to mid-single digit. Okay. Technically in the numbers, again, not the worst report, right? Essentially in line for the most part with the revenue, and EPS came in slightly above expectations. But of course, Wall Street always looking for those big beats, those big breakouts. So Not enough for CMG. We're dropping the stock roughly 5% right now after hours. And again, we're re-mentioning those potential tariffs with Mexico and the avocados. Please, not my guacamole. So we'll see what happens. But again, the chart has been pretty tight on the up and up. So even if we go from like here, these lows, I mean, obviously, if we completely tank down, we can go to the low 40s, maybe about 43 and a half. I don't think it is that drastic where we need to do that. Yep, and you can see after hours, look, almost right to that trend line. Yeah. Technically kind of looks like a symmetrical triangle after this drop and the little pop, and now we have the flattening and the tightening. So technically symmetrical triangle, not bullish or bearish, could see a break up or down. So have to keep an eye on this mark here, about 55.63 it looks like. Let's look at stock charts real quick. I'll let you go. Oh no, wait, I'm sorry. Let's look at the numbers real quick. Real quick, bear with me. Debt through the roof. I know they keep expanding. Debt now up to $4.5 billion. This as of last quarter. Free cash flow $298. It was $349. Okay. Cash $700 million roughly. So cash minus debt would be, you'd still be at like minus $3.7 billion. Assets outweighing liabilities in both the short and the long term. Equity as of last quarter technically dipped down slightly, but overall it's on the up and up, going from the low 2 billions to above 3.5 billion. 3.6, we were at what, like minus 3.7, right? So those wash out. So now we have to look at revenue. Book value slowly inching up. As of last quarter, 265. Stock sitting here at 56 even now after hours. So we're trading, 25 times book. 80 billion now. Well, 76 billion. And that's what, like 11 billion? If we add those up, that's like 11 billion. So we're, after this drop, we're trading roughly 7 times quote unquote fair value with a company in the food service industry that's dealing with hyperinflation, increasing cost, and potential international tariffs now coming under the Trump administration. So yeah, we might go down before we go up. And yeah, looking at the book value and my personal fair value, I mean, we cut it down here. That'd be what, 8 points? Be close to 15% off of 76. Would be about 10. Now that still might not be enough. Yeah, it might actually come down to this trend line, actually, the more that I look at it. It might come down to that trend line. Again, I know these aren't like perfect and precise, but this is see this is like all time. See how I went across the bottoms here in 17 and then up, kind of touching the bottom body of that candle there when we had the lockdown drop. You can see this is like the very long-term support trend line. And if we happen to start breaking, let's just say now and hypothetically next quarter, you could potentially see about $30 a share. If it happens, in my opinion, you can't be shocked, because in the numbers, the company could be viewed as overvalued. But again, you're going to need the big tariffs definitely set in place on Mexico to hurt that avocado segment, right? The guacamole. And you would also need a market correction, I think, in my opinion, to see this much of a drop. Believe it or not, if we slowly bleed this down to the mid-high 40s going into next quarter, in my opinion, I wouldn't be shocked. To break this support trend line to come down to this one at 29, 30, I think we would start to have to see markets chunking down. That would be the reason for that much drop, but just my opinion. Basically, again, the way I look at it is this. This is what I mean. Markets are near highs, right? CMG doing good business. Would I personally buy it at 56? No. I would look at it again at 46 if it happens to drop down. And again, looking at my trend lines and my recent and my historical success rate, I would probably wait for it to pull back even into the 30s. So we'll keep an eye on it over the next quarter or two, because I do know it's a big name, and now it's a little more affordable after the 50-for-1 stock split. Stock was up at, $3,000 a share. Now it's down here at 56. 55.38 support trend line on the daily. Stock tried to get back above that 200-day moving average and rejected. Yeah, we're at sub. So 55.38. Did we technically hit that? I know this was the flash to 52.25. 53.98. 55.28. Yeah, so we've kind of tightened up. In my opinion, it should drop, though. In my opinion, it should drop. MACD recently crossed to the upside, but again, the stock kept rejecting off of the 200-day moving average. So I think they're going to drop it before they pop it. RSI was middle of the road, 52. Here on the weekly, RSI sub 51. Again, you can see over the last several weeks, the company rejecting off of that 50-day. I think they want to bring it lower. And I mentioned the other trend line was, what did we say, like 43, 45, right? And we can see support level on the weekly at 46.10. And then the 200-day just above 40 at 40.64. In my opinion, that should realistically be where the stock goes. But if markets, again, remain pumped up, they might not completely tank it down, 20, 30%, even though I think it should. But that's pretty much it on CMG. But, we'll keep an eye on it. I'll try to do updates here and there. But I spoke for a long time. So that's pretty much it. I'll end it there. Once again, Stocks by the Numbers, I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comment section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.